Welcome back to Everything Money. In this video, you will learn about Microsoft and Microsoft stock. We'll show you the financials of this company and their amazing growth over the past years. We'll move toward what you should be paying for this stock using our stock analyzer tool and our exclusive Everything Money software. If you want to trade Microsoft at a quicker pace, Mo will show you all the charts and trends so you can make money on the trades. But first, why should you watch this video? I bring your questions about Microsoft and where they're headed to a couple guys that own and operate over $100 million in real estate, multiple businesses, and stocks, and they'll help us, guide us, and provide a mindset, approach, and a process to see if we should be investing in this company. Paul, I know you love this company. Take it away.
All right, guys, thanks very much. Follow us on our new Instagram account, Everything Money Investing, and then also follow our personal accounts because we do lots of great dog pictures, and Mo actually has a lot of good stuff, but his girlfriend tends to handle that stuff I think a little bit more. Okay.
She stopped because she's one of those people that says that she'll do something then doesn't do it.
Oh, okay.
She should be our host for Everything Money.
This is awkward. Why do you love Microsoft? Because you fire right up when people talk about it.
I don't know. I think Microsoft's so awesome because it generates so much cash. I mean, it just spits out that, Google, Facebook. I love these companies that just spit out so much cash. The problem is,
go on.
Do you hear the fire in me? How much I love that?
Yes.
And I think you're going to find at the end of the video that I'm not buying Microsoft. So let's use our Everything Money software, exclusive software. Go to the 8 Pillars tab, MSFT, Microsoft, boom. So Microsoft is a $2.5 trillion company. Pillar number one, we went the 5-year PE under 22.5. It is currently 61. That's an X. Boy, look at these margins, Seth. 69%
Jeez.
Gross margin, 38% bottom line margin. Pillar number two, we went the 5-year return on invested capital greater than 9%. It is 17.5. Check mark there. Dividend. They pay $17 billion a year in dividend. Folks, dividends are not always secure. You got to compare it to the free cash flow. Right above it, we put the free cash flow in our exclusive software to make it easy for you. As you can tell, they can easily cover the free cash flow, the dividend, because their free cash flow is plenty high. Plenty high. Pillar number three, we want to see revenue growth of the last 5 years. So go to the income statement of our exclusive software. 99 billion to 176, check mark there. That is awesome. Massive revenue growth. Pillar number four, we want net income growth over the last 5 years. So we just scroll down a little bit, 26.4 to 68 billion, another check mark there. Boy, oh boy.
Wow.
Yes.
If you're playing the exclusive content drinking game at home, which has become very popular in the Everything Money community, join us in taking a shot every time Paul mentions it. Go ahead, Paul.
Pillar number 5 on our exclusive software.
You get drunk.
You're done. You're done.
Yeah, your face is planted on the screen. Is our shares outstanding. Guys, we want shares outstanding going down. We don't want them diluting us as owners by issuing more shares. We keep the same number of shares. Now we have to split up the money with a bunch more other people. So we go to the very bottom of the income statement, 7.71 billion to 7.51. Check mark there. Not a ton buyback, which I'm glad because it's expensive. I don't want the company using its capital on expensive buybacks. So I'm glad about that.
Reiterate this, Paul, because this was confusing for me as a new investor. Is when you say get the money, I don't get a share of the profit that's coming home, But go on.
But it enhances your balance. You get a share of the balance sheet. You get a share of all these things that if all of a sudden the company had $10 trillion in cash, they didn't have anything to do with it, what would they do?
Issue one-time dividend.
Yeah, they'd issue a huge dividend, say, there you go. They'd pay you that way. Mm-hmm. So it would come to you eventually, but it's a matter of if they're able to invest their capital at high rates of return, which software businesses tend to be able to do, then let them keep the money in there and just keep growing revenue and profit. And then if it sells one day, then you get that share of it.
Pillar number 6 is total long-term liabilities divided by 5-year free cash flow, and we want this number under 5, Paul.
Yes. So we go to the main page of our exclusive software. We go to the 5-year average free cash flow, and we multiply it by 5. That is 212.5. It's actually $12.6 billion. We want the long-term liabilities to be under $212.6 billion. So we go to the balance sheet on our exclusive software. I have to just keep doing this forever.
Sorry, no, I screwed us now.
Total long-term liabilities at the very bottom of $103 billion. That's a massive check mark. They can pay off their long-term liabilities in under 2.5 years.
I mean, it is exclusive. If you're out there trying to make some of these decisions without data like this, I don't know what the heck you're doing.
It's like I was blind and don't have the stick.
Well, I was, Paul. I was investing. What, Mo? I was investing
What's the stick called?
without knowing any of
I have a
this
blind
stuff.
friend. I can say that.
I wasn't, you know what I mean? I used to invest for a decade without knowing any of this stuff. It's just like,
You like the company.
I like this. So
You used to like to use the product, so therefore I'm going to buy the company.
how was pillar number 6 looking?
Oh, it was pretty good.
Check, please. Pillar number 7. This is the grandpappy of them all. Free
Cash
cash
flow
flow
statement.
growth, baby.
Okay, so free cash flow is cash from operations less your capital expenditures. You can do one of 5 things with that: pay dividends, buy back shares, pay down debt.
Uh-oh.
Yeah.
Make acquisitions.
Make acquisitions and invest back in yourself.
Cool.
All right, so here's the cash flow statement. I added this free cash flow line to do the math for you. 5 years ago, they did $32 billion. Last year, $60 billion. That's a check mark. Our final metric, pillar number 8, we take the 5-year average free cash flow, we multiply by 20 to get some sort of start for market cap for us to look at it. 5-year average free cash flow is $42 billion. Multiplied by 20, we're at $850 billion versus $2.5 trillion.
Yeah.
That's a massive X. So you're probably thinking, Paul, you don't get it. I'm like, okay. But remember, their 5-year earnings was 60. We went under 22.5. Stock's going to fall by a third. That all adds up correctly.
How do we take all this data and transform into what do we pay for the stock price?
Well, first, I want to show you guys the 8 pillars.
Oh, thank you.
This 8 pillars tab in our exclusive software, our super exclusive software, does all the work for you, so you can just skip to it.
Now,
And
this
guess
is
what?
nice, Paul, because I'll just be talking to someone. They'll mention a company in 2 seconds. I pull up the 8 pillars and give it a look, you know?
Exactly. So, overpriced over here. I like everything else. So what am I going to do?
Wait.
I'm going to by the way, but what you said before is we don't know if it's overpriced yet or not because every investment's a present value of future cash flow. So we have to use a stock analyzer tool to tell us what to pay for the stock today based on our assumptions about the future. So we go to the stock analyzer tool. We go to 10 years. Now I'm going to ask my trusty friend over there, Mo, to give me some numbers for revenue growth.
So they make a lot of acquisitions. $9 billion this year, $2.5 billion last year, $2.6 billion the prior year. So I guess we have to factor that in, right?
Yeah. Plus, it's a huge company.
Huge company. 468 too high for you?
Boom. Love it.
Okay.
Yeah, we did 5 and 8 last time.
Okay.
Great. Profit margin.
I think it's going to be around that 10-year number. Let's say 25 and a half, 26, 27. Oh, wait.
Let's do 25 and a half, 26 and a half, 27 and a half. And here's
Just
why.
leave it there. Yeah.
I do think that it's possible that the profit margin goes higher because of all their subscription
software.
business. Yeah, it's all the software subscription business. All right, so free cash flow margin. Mo, what do you
30
think?
and a half, 31, 31 and a half.
30.5, 31, 31.5.
Yep.
Okay.
PE, 14, 16, 18. I could also see 12, 14, 16.
I like 14, 16, 18 because I do think they have that moat there.
Yeah.
I do think they have a very
I
significant
really like
moat.
the subscription side. I think it's
And-
still room for them to grow. To me, this is like an Apple. You know, I always talk about Apple and the subscription services that could come. They're not in so much of a could come place. They have it.
Okay, and desired return, we always do 12.5% because, guys, you can invest in an ETF and get 9 or 10%. Might as well invest and get 12.5% individual stock, plus it provides a margin of safety. Hit the Analyze button, and what do we got here, guys? All right, so our numbers. A low of 80 to 90, a mid of 100 to 115, and a high of 130 to 145.
Current price is 330.
Yep, current price 330. Definitely not a buy. Let's go make some let's go make some higher assumptions and see how overpriced it is.
Okay.
Let's go to the revenue growth numbers. Instead of 4, 6, 8, let's do 8, 12, 16. Guys, this crushes everything that's been done in the last 5 or 10 years.
This is basically going to be sitting right below COVID levels
And guess what?
of revenue.
Still massively overpriced.
Yeah, nowhere near.
Guys, to me, this is just put whatever assumptions you want in here. It's still crazy.
Yeah, Paul, we talked about Microsoft with Monish Babrai when we visited him in Austin, so make sure you check out that video on our YouTube. And if you want this software behind Paul, you can get it. Paul will let you know right now how to grab it. Go ahead.
The reason we created the software was exactly for this, because people watch the videos, want to do their own analysis when they see me do this. So we created the software so people could do this. You get everything you see here on the Everything Money channel, on the Everything Money page, all our tools, plus all the ones coming up. You get over 30 years of financial data. You get access to Seth Mo and I. You get all the 8-pillar analysis, that stock analyzer tool, real estate calculator, retirement calculator, 8-pillar portfolio. We can put in 50 stocks at once. It tells you how they all look as a portfolio. All of this plus exclusive daily content. We have 1, 2, 3 videos a day that we release only to our users of our software. You get it all in mobile form. All of this is available on your mobile app, all for only 90 cents per day. 90 cents per day. If you can increase your returns or decrease your losses by 1 or 2% a year, that could lead to hundreds of thousands, even millions of dollars in extra net worth for only 90 cents a day. 2 ways to sign up, everythingmoney.com or Patreon. The benefit of everythingmoney.com directly is you don't pay sales tax yet because we're not big enough. So sign up, only 90 cents a day. This is a no-brainer, less than a cup of coffee.
And if you want to trade Microsoft at a quicker pace, Mo can tell us how. Mo, what's going on? You have to join the Bitnest Nation. You can trade with Mo on a daily basis. What's going on with Microsoft? Because I'm dying to know.
So these are our all-time highs here. And we're kind of just, over the past, 2 months, maybe 3 months, we've just been consolidating in this area, just bouncing around. So right now, I personally, I've said it before, I don't think I would start getting into these positions long for the very first time until you break out to these all-time highs. That's when I would start entering these. If you're in them, stay in them, ride the wave. You know when to exit as soon as your red line drops below 80%. But getting in them for the first time, no, from a long-term perspective. I would come over here and play this from a swing trading side. You are moving down through the sweet spot. If you can break under this 50-day moving average, you can get down to the 100, and that is the play that I would make here. I'm also very surprised when I saw this. If you come to a day trading chart, this is a stock that moves quite a bit per day. I don't know if it's always done this, but it's doing it right now. So come over and look at this. You guys, you could have shorted this on, what day is today? Tuesday. Below 20%, making engulfing candlesticks down, consistent volume. Yesterday in the afternoon, over 80%. Right at the end of the day, you could have made a couple of percentage points coming up. And today, this has been a short all day. It looks like it's rebounding right about now. So this might be your exit point, but you would have been in here at about 330, and the stock price is right now 326.81. So there's multiple ways that you can trade this stock. This is a really good one to keep in your portfolio from a trading site, so keep it on a watch list. If you want to learn all of these rules, come and join me. You get the Trading 101 series, which is all the rules that you need to be successful. The Employed Trader series, which is 6 stocks that I go through every single day and update you, especially if you're a working person. That's where you can utilize me. Exclusive monthly Saturday seminars that are just for the Bid and Ask only, open Q&A and teaching sessions, and a Discord community of 950 plus people that all have the same goals as you. Come and join us.
That is our take on Microsoft. A smidge high at the moment, but when it gets into our wheelhouse, we will certainly take a look. We'll update you and maybe be buyers. That's our take. Join our community. You'll love it. Fondle the thumbs up on the way out. We'll see you next video.